Hi, everybody. Welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury. And today I'd like to talk to you about going short or going long in the stock market. Now, for some of you who aren't familiar with the terms going short or going long, when we say going short in the stock market, what we're referring to is that we're actually going to sell the shares and then we're going to, in hopes of that the stock is going to go down, and then we're actually going to buy them back at a lower price. So we're going to actually sell the shares first. We're going to hope that the stock comes down and we're hoping to buy it at a lower price, which is essentially called covering your position. And that difference in price is your profit. Now, of course, sometimes the stock can go up and we're forced to cover. And when we cover at a higher cost, it's obviously a loss. Now, just because it's a loss, it could also, if a lot of people are covering, it could also create what we call a short squeeze. A short squeeze is when a lot of people who are shorting the stock have to cover the positions because the stock is going the opposite direction. And when they do so, it now creates more momentum to cover and creates more demand on the stock, which then, the price goes up. And because the price goes up, obviously the people who are going long, which is the people who are hoping that the stock actually goes up in price, so they buy it at a lower price and they hope to sell at a longer price. It obviously benefits them a lot. So today I'd like to show you some examples of today of especially what happened with a stock called NTN. Today is Thursday, August 13th. So if you're watching this, you could go back and take a look at it. Had a massive amount of momentum. Thought it was a really interesting stock to watch today, so I thought I'd share it with you guys. So as you can see here on the screen, basically the stock had a few days actually of sort of popping up. This looks like back in June 16th, the stock had not a whole lot of trades. It looks like it had about 12 million shares traded, and it looked like it went from opened at 127 and had a high of $5.20. And the next day it opened up a lot lower at $2, or excuse me, it opened up at 5.98. It popped up higher, but it ended up closing a lot lower. So a lot of these stocks are what we sometimes refer to as pump and dumps. If you're not sure what a pump and dump is, it does require us to sort of go and look at sort of the financial records. There's a great website called BAMSEC, BAMSEC.com, and to sort of do some due diligence. So we call it DD. We want to understand a little more about the company, the financial, and we're also looking to see if they have any what we call shelf registration. Do they have any offerings, right? So when we talk about an offering, what we're talking about is, are they going to release shares to the market, which will dilute the value of the stock? So, for example, if there's 100 million shares to trade, what we refer to as the stock float, the stock float, if they add, let's say, another 10 million shares, well, now the value of the stock has gone down a portion. So a lot of times when these stocks are pumping up, a lot of these market manipulators and market makers that we talk about, they're actually pumping up the stock in hopes that when they do announce the offering, they know that everybody wants to get out of that stock, and stock usually tanks. So a lot of the people who are sort of manipulating the market, pumping up the stock, what they do is they pump it up, and once they announce the offering and they know it's being announced, then people dump it and they take short positions. So they know that it's coming. They'll take a short position knowing that the stock's going to tank, and then they cover, which is why a lot of times when you see a stock tank down, you'll see it slowly kind of pop back up. That's because those are the shorts covering their positions. So enough about like all the fun terminology. Let's just get right into it and talk about why we're talking about NTN. So again, looking at my 1 minute chart, I actually got involved with this stock at pre-market, and the reason why I got involved at the pre-market was it was one of the leading gappers. So from Wednesday, it popped up and it made a significant move and it continued on. And the first thing you can see here is we have a pivot point here, a quarterly pivot at around 566. And you can see as the stock sort of gapped up, it failed to break this, and then you can see that it's consolidated down here, and then it tried again. Okay, and then it tried again. So one of the things that you can see is if it tried it once, twice, 3 times, 4 times, 5 times, almost 6 times it tried. Now this is the time, 4 o'clock, where my mouse is. 4 o'clock is when the pre-market opens for majority of brokers. A lot of people tend to get involved, which is why you can see this red volume bar, right, went up significantly compared to what it was previously. This is very low volume, and then all of a sudden 4 o'clock hits and there's a jump in volume, and you can see it just failed. And what was really interesting about this stock that really kind of actually bothered me was that yes, it failed, but look at this drop at 4 o'clock. This drop goes from all the way from 540, or let's say the high of this candle is 550 and the low is 460. So within 1 minute, this stock dropped an entire dollar. So that by no means is normal, because once the stock drops that much, usually you would expect a bounce back off of this purple line, what we call the VWAP, as we've discussed in the previous videos. We always expect as traders that when the stock drops, it's going to bounce off the VWAP, and we're going to get some type of bounce back before any other flush down. And what this stock actually did, and I think the market manipulators definitely knew what they were doing today, is it actually flushed, came back up just slightly above the VWAP, and it just failed. So we're talking about from 550 at 4 a.m. and it went all the way down within 30 minutes. It went down to 330. And for someone like me who's watched the market and kind of knows more or less how the market works, this is not normal. So you would think, okay, the people who were in here were probably long. They might have sold off here, right? Then we got long here, and then they probably sold off. And now you have to ask yourself, who are all the people who got stuck in here, right? All the people who thought, hey, this might go up. It ended up just dropping down, and it dropped all the way down to this quarterly pivot down here at 330. And it just consolidated. And it actually did not break this. It actually tried several times. So let me zoom in here and see if this makes a little more sense. So you can see here it bounced off the pivot, right, and consolidated. So it just didn't really have any general direction. Again, it bounced off, it bounced off. So something was really interesting about this 330 level. And as soon as the market was slowly about to open, it flushed even more. So I actually got involved with the stock somewhere back here. It had made the move. I didn't sell. And I ended up just sort of watching this flush down without, and still holding on to the position. And when it made this sort of move, I got involved with the short. So I made some of my money back. And then all of a sudden, look what happens. So the market opens at 6:30 a.m. Pacific time. And look at this thing. It goes from almost like, looks like, what's that low of the candles? 281. It goes from 281 at 6:30 all the way up to almost $4 in 10 minutes. So who do you think was really playing and manipulating this game, right? So we had a little volume and we had sort of ascending, right, volume, and look what happened. This thing just completely blew up almost $2 in a matter of a few minutes. And then again, getting involved with the short. So you make the long, you can sell it off the position, and then you can start to size up. But look what continues to happen. And again, this is a 1 minute chart. We can see that now we're trading above this purple line, which is the VWAP, which we said is a bullish pattern. And you can see that this thing went up even up to $5. So now we're trading at $5, and it's only been an hour since the market's opened. And then going back, if you ever want to know what type of price am I going to see a stock hit, look at some of these pivot points from the pre-market. So look at this point here, which is 444. And then, of course, we talked about this upper bound. So, of course, you can see the amount of volume in the market was incredible. You can see there was a lot of volume in the beginning of the market, and then it sort of slowed down. And then, of course, it picked up again. So as the market continued, we can see that as we're trading above the VWAP, right, the longs are in control. And then we sort of get into this consolidation period where we think, okay, the stock is done for the day. It's going to be done, and we can take control again. And then guess what happens? It comes right back up, and then it fails, and it comes right back up. And now all of a sudden now the shorts are starting to cover, and you can see that the volume, which was sort of more or less, it was slow from 8 o'clock all the way to 9. All of a sudden you can see the volume starts picking up, and you can see what we talked about in the last video about my favorite indicators, that the volume picked up, but the RSI indicator showed that this was overbought. So when something's overbought, we can sell it off, wait till it gets under 70, and usually we say the 50 is the neutral zone. And then you can see as it was sold off, it ran right back up, and it just kept bouncing, and it kept going up. So now we're thinking, okay, this thing's done, right? Because remember when we go back to the pre-market, we talked about how it couldn't break this mark. Well, guess what it did? It broke it, and it broke it multiple times. So this was all sort of a trap for the shorts, right? People who shorted here, and again made their money, came up here and started shorting. Well, this thing was now starting to go up, and it climbed up and up. And you can see this Bollinger Band, which is this yellow line, and it represents in an upwards direction, especially the wider it gets, the more volatile it gets. You can see that it was bounding on the upward direction of the band. And it just kept going up and up. And what's happening here is what we call the squeeze, right? So Shorts are betting that the stock's going to go down. And as the stock goes up and up and up, they're realizing it's going in the opposite direction as they plan. So what are they doing? They're covering their position and they're boosting the price up. So this actually happened for the first, look, 3 hours of the stock, right exactly at 10:30. So in trading, we refer to this as the front side move. So when a stock is gapping up, we refer to it gapping up sort of as a front side move, which usually happens in the morning hours within the first 3 hours. And then a lot of times after that happens, right? So again, we keep looking for these overbought indicators, it sells off. So it was bought up all the way up to 10:30. It hit a high of 776. Now, why is that important? Look, if you go to a yearly, sort of a daily time frame, but let's go to a couple years back, you can see this stock has a history of pumping and being dumped. So you can see these sort of these candles, right? They're popping up and there's no continuation. It's just a pop and a dump, pop and a dump. And you could just see it throughout. But look at the volume we traded today, right? We traded 208 million shares. All these other days, you don't even see the candle because it was so small, right? It was just very little volume. Nobody was really trading the stock. And all of a sudden today was just explosive. So again, we have these pump and dumps. Now the problem with today was look at this previous high on a recent candle was 675 and today was 776. So what do you think the people who were holding and shorting and expecting the top to be, $5 or $6, they're covering and covering. So this thing kept pumping up all the way up to 776. This is a stock that on the same day it got a notice from that it was going to be delisted, and all of a sudden it's being pumped all the way to 776. So this is market manipulation. These are people, algorithms, you name it, big money, institutional investments that are buying this up, and they're essentially in control, right? And anything in life, when there's a trend, you have to go with it. You can't fight it. So if, for example, this stock was clearly in the first half of the day along. So if you were shorting it, you were constantly finding yourself covering your position. But if you were longing it, if we look here at the 20-minute, right, you started here at the low of 281 and you had a $7.66 move, guys. That's a 300% return in a matter of 3 hours. Does your bank give that to you, right? This is why you get involved with the market. And I'm not saying this is something that a beginner trader should get involved with, but you can at least study it. You can actually read about it. You can understand it, right? You can start to learn the terminology of who's in the stock. Okay, so we probably have longs and shorts that are getting involved. The shorts thinking that the stock is done. Now all of a sudden they're covering the position as the longs take over. And then up here you can see this rejection of the price. So the longer this wick, the sellers are pushing this price downward, right? The longer this wick, this price is being pushed down, and now the sellers are in control. And then when they cover their positions, the price slows up, and now again they reshort for the pop. So they push the price back up to pop it, and then they reshort it, and then again they capture this value. And now guess what? The stock's back at like 385. So it was an exciting ride. It was a fun ride. And look at each of these candles represents a minute on this chart here, my 1 minute time frame. Look at each minute. This was 702,000 shares. Up here at the max where it hit 776, there was over 1.3 million shares traded in a minute. So the stock was volatile. It was moving quick. There were a lot of people stuck. It was constantly moving up. And you can see again, look how high it was off of the VWAP. The VWAP was down here, and look how high this was, which means it was extremely bullish. People were stuck, and then it started to sell off, which we call now the backside of the move. So again, are you short biased? Are you long biased? We'll look at the history of the stock. We know that it was a pump and dump. So most likely at some point we knew it was going to be a great short, but it was a matter of where, at which level was that. And we have to look at the fact that if we have 100 or 208 million shares traded, how many times has that the float rotation, which is the amount of shares that were traded, been rotated? So if it's been rotated 5 or 10 times, we know the thing is going to get pumped up and up and up. So again, I thought it was a very fascinating stock. It was really exciting. It was definitely something that everybody was watching, excuse me, and I just wanted to share that with you and just sort of talk to you guys about, knowing your style of trading and through experience, watching charts, understanding kind of your style. Are you into these volatile stocks that move and make these big moves, or is it too risky and you want to do something a lot safer? So a ton of safe stocks that don't move as much, but at the same time, they're going to be harder for you to get in and out because there's not a liquidity, which means there's not a lot of shares being traded for you to buy in and sell out quickly. So there's most likely a chance that you might get stuck in a stock. and that could be an issue if you're trying to be a day trader. So with all that said, guys, leave a comment below. Let me know if you have any questions. I'd be happy to answer them. I do read them all. And I'll talk to you guys soon. Take care. Have a good day. Take care. Bye-bye.